Hello, fellow traders. 'Tis I, the Rumpled One. Thursday, January the 31st, the year 2019. Let's talk trading. Monthly wrap up. It's the last day of the month, and I sure hope each and every one of you had a great month to start the year off with. I listened to a few things over the past day or so and read a couple of things, and something hit me like a ton of bricks. It's like, hey, the image got really clear. I read this email from that Seth Godin, and he said something to the effect of, who are you selling to? Amateurs or professionals? And all of a sudden, just with that simple statement or question, a lot of things became clear. Why I am such an outlier? Because pretty much my entire adult life, I've been a professional. And even as a kid in school, I did things more in a professional way than an amateur way. The difference being, professionals, for the most part, figure stuff out for themselves. And if they can't, they go to somebody who can give them the answer or tools or skills that they need. Whereas amateurs, they'll listen to just about anybody. And what that has to do with trading is that I know I've tried to work with some different marketers out there. And even in my non-trading career, I just don't get along with marketers because I always think they're full of you know what. And in a way they are, because they always want to sell the sizzle. And I'm always focused on the steak. What I mean by that is, I came up with an indicator that I presented to a marketer. He goes, well, can you make it put an arrow on the chart? I go, he doesn't need it. He goes, yeah, but we need that eye candy. And we just constantly fought over this stuff. It's like I'm trying to show you the nuts and bolts and why this thing works and this frequency distributions and statistics behind it. And you're talking about sticking some stupid arrow on the screen. But you see, he was focused on, the people that he was selling to, the traders, they're amateurs. And that's why they fall for that stuff. I mean, you can see it in all the ads. It's plain as day. I mean, in all these other traders' videos who are trying to hawk their robots or their seminars or programs or indicators or whatever, you can see it plain as day. They are appealing to the amateurs because they know the professionals are going to laugh at them. I mean, there's nothing sexy about a horizontal line. But hey, make it squiggly and make a couple lines cross and put some kind of dot or arrow on the chart, and hey, now you got something you can sell. And it's just really so apparent. And then I was listening to Dan Locke, and he was talking about having a distribution channel. And that's how you become successful, that you expand your distribution channel. But once again, who are you selling to? Amateurs or professionals? And so I bring up this amateur versus professional because I also listen to this talk on one of these other YouTube videos. This guy who's a professional trader, supposedly one of the best short-term traders out there. The thing about the guy was, he just pretty much told it straight. No candy coating, no sugar coating, no glam, no glitz. It's just, Basically, you take care of the money. You try it. If it doesn't work, you stop out. And after so many times, either it works or it doesn't. And then you move on. There's nothing glamorous about it at all. So the question you have to ask yourself, you, trader, sitting in front of that computer right now, in front of your trading screen, are you a professional or are you an amateur? You have to be honest. And by professional, I don't mean you're trading $1 million account versus $1,000 account. No, it's all about the approach. It's all about the discipline. It's all about what you do day to day to work towards that profit. You know, and really, this screen right here will tell it all. If you're a professional, this is second nature. You wouldn't think about putting a trade on without employing your money in risk management. Just wouldn't happen. In fact, last night I watched that movie Rogue Trader. If you haven't seen it, you got to watch it. You're not going to really learn anything about trading. It's just entertaining. But you can see what happens when things spiral out of control and you add the losers. You can wind up bringing down one of the largest banks in the world. I thought it was kind of funny in a way. Okay, for the week, we still have the pound dollar, didn't fill the gap. Everything else is filled. We are 30 pips below the weekly open. As you can see here, we're just about, and actually, looks like we are in that lower wick zone of the previous week. Yesterday, we poked our head above the yearly open, but today, giving it back up. And as you can see here, once again, here, this is Monday, first day of the week. You see here it broke it a second time, and then broke it a third time. You can see here yesterday it sailed through the top of the first day of the week. So we're showing at the first day of the week as the weekly opening range that over the next few days, these are tradable levels. Price has to go somewhere, right? And once again, price is below the last 12 months open. And tomorrow we'll get to put in 12/19/02/01. And we'll see what happens. Still within the first day of the month's range. It was such a big day. Let's see what happens tomorrow. That should be really interesting. And look at here. Remember we had that inside bar 3 days ago, and now we poked out of the other side. Once again, those levels proving to be tradable. So Thursday, Wednesday, Tuesday, Monday. So not only did we have the Monday bar being, the first daily bar of the week, using that for levels, but it also happened to be an inside bar. So we got double. You can see here, went into the upper wick zone, came out into the lower wick zone and out. 80 pip range, only 1, 2, 3, 4 above 100. But once again, nothing glitzy, just some horizontal lines based on yesterday's open high and low and today's open high and low. And once again, those are being proven to be tradable levels. And in this case, just trade with the daily candle color. You can see we put in the weekly highest H1 open right here. And price has moved down off of that. And in fact, we are now getting into the lowest open for the week right here. And we have the buy zone. Once again, pivot was right near the open, not giving us a bias at all. And you can see here, price just had some triggers, but I mean, these were scratch trades. Finally, got a decent trigger here. And we went short, came across that weekly open, came back to it, and then back down once again. So showing that the daily open and the weekly open are tradable levels. Rat zone, 79 pip range. So right here, Larry live trade, looking for a rat reversal off of that low of 124.48. And as we showed before, we took out the pivot. Wasn't really anything right there, right at the open. Not much of a bias. We still have 2 missed pivots this year and the 2 from last year. And we'll see what happens if we can take them out. Maybe, maybe not. Price action, as always. 1 ball at the bottom, green at the line. 1 ball at the top, red at the line. 3 ball at the bottom, Larry live trade, going long at 124.60. And for those of you wondering what's a Larry live trade, it's just any call that I make live while I'm making this video as opposed to talking. So this right here, that's a Harry hindsight because it's already happened. This one is happening now, so it's live. So Harry hindsight versus Larry live trade. Wick zone already showed in and out. Daily, weekly, monthly, open, high, low. Just trade with the direction of the cross. Can't go wrong. Well, you can because this is for educational purposes only and your results may vary. And as you can see here, only about a 2 pip range. Not much exciting going on. And you can see here, punch the screen on right there. Oh, there's maybe a pip and it came back. And then you got a touch here. And you can see it's just kind of waffling right around since I've turned the computer on, looking at the price action. Actually, not turned the computer on, but brought up my this trading profile. And let me just look here. Frequency distributions, high open. Once again, you can see if you trade off of the open, you have a chance to make pips. That's trading away from the open. And on the range frequency distribution, you can see daily range is, 70 or higher, about what? 70, 80% of the time. So that's we're looking at the range. Okay, so that kind of wraps it up for the month there, fellow traders. I hope your month was profitable. And I want you to really think about this for the rest of the year. Professional or amateur? Which one are you? Which one are you striving to be? Anybody can be an amateur. It takes some effort to be a pro. And the amateurs usually look for the easy way out, the magic bullet. The pros do the work. Because remember, it's not what you trade, it's how you trade it. So get out there and drain the